Hello guys, hope I am not late this time, like 2 or 3 minutes. So nice to meet you guys. So as usual, we will be waiting for a few minutes and then we can begin our session. It's always about sharing information about trading, investing, and about the stock market in general. And we always have to speak just about anything that it is related to trading stocks or investing or day trading or whatever. Hello Tesla 3, how are you? Nice to meet you. So as usual, we try just to just deal with the common thing that we always speak about. Thank you very much, Tesla. How are you? So as usual, we always begin our session with just general greeting, and then we can just go ahead and answer your questions. Okay, so each time we have new friends, we have new students, and I have my old friends since 2011. So it's a very big friendship, and I hope you guys to enjoy all what we do. And always we try just to answer your questions and to speak about the market in general, what's going on in the market, and how things is for it. Okay, so let's see. So I have a question here with Tesla 3. Is short float important in trading? Then we have Rahmatullah Modi. How are you, Rahmatullah? How are you? I watched all your videos. Thank you very much, Tesla. So, short float. Now, first, what do you mean by it? You understand that sometimes in the market, they give you information about positions. It means there are hedge funds, there are big organizations, a lot of banks, brokers, a lot of stuff. It means all these people, they short sell a stock. They have a position and thinking that the stock will go down. This is what we call a short float. So it's not understand that these people are having a position, but the market doesn't follow these people. Now let's say sometimes you find a short float, but you find, for example, that the stock is going up. So it means that those guys are losing money. That's what it is. And you will see that the more the stock goes up, the more the short float will be less, because these people, they lose money. Understand that there are some people, they have positions for 1 year, 2 years, 3 years, thinking that this company will collapse. And this is why they short for the long term. And it's a very big risky positions. But if the stock goes down, they will be making a lot of money. This is for sure. Okay? So understand that most of the time, I'm not saying most of the time, mutual funds, they don't participate in selling short. It's the law. They don't. It means mutual funds, they always buy long. They don't and they don't do trades. For example, they buy today, they sell tomorrow, or after 1 week or 1 month. They don't do that. So understand, that's why we have trends. Trends is the accumulation of the buy of the mutual funds. If they buy today, they sell tomorrow, the market will be so bad. Excuse me. So this is what we call a short float. So this is for the short float, and the word understand the word float. It means all the shares, the common shares that are tradable in the market. So it will show you what is the shares that are sold short. How are you, Rahmatullah Modi? Thank you very much for coming. And thank you, Tesla, for your questions. Now, hello, Duna. Thank you very much for coming. We see also Wiseman. How are you, Wiseman? Thank you for coming. And hope you have a good weekend. Yes, as always. All the days should be good. Tesla said, is after earnings release important to institution to buy? No, see, Tesla, I'm trying to tell you something right now. You want something sure as a trade to make, and you make money. Now, after the earning release, in some stocks, not all the stocks, I have spoken in my channel a lot, and my silver subscribers and golden subscriptions, I give more information about this and more details. What did happen is that news is just about the news. Sometimes we have a gap up, it means the stock could jump because of good news. Sometimes the stock go down into a gap down. This is just because of the news. It has nothing to do with the trend or with the mutual funds or institutions or whatever. Now, let's say, as you said, institution to buy. So I don't know. This you will see it later, and this is what I teach as a strategy, okay? Is how it means when to buy exactly and when you see yourself succeed in a trade. This is what I'm teaching, and this is typically training level 13, how to buy from the support line, okay? But there are criteria that are things that you should see in those stocks, and then you can buy and just wait, okay? And this is what I always follow. But when you say institutions or retail traders or any person in the market, you will never know. You will never know. But when there is a big move, there is a beginning of trend, understand that this should have mutual funds behind, because mutual funds themselves, it is their choice that they change the market. They change the market. For example, have you seen, for example, energy sector? I spoke about many 1 year or 2 years ago, or 2 years and a half. Energy sector was doing so good in 1 year or two. So we are buying all the stocks that are energy at that time. Okay, it was very good. But one time it stops and it has been going down. I make videos at that time and I say that this sector is, there is like a sell-off, and it continues, and then it stops and then it goes up, and we have a lot of trouble. But understand that energy sector was nearly not the only one, but just the only one that was hit so hard. Okay, it was so hard hit. That's why the collapse of oil and gas collapse, and a lot of countries, they have been burned, okay, in this war. Because, and understand that Wall Street has a relation with politics, and a lot of countries, they have been punished. Those oil exporter like Venezuela, like Russia, like Iran, like Middle East, all they have been punished. And some countries, they have been into a trouble, because when mutual fund, they sell oil and gas and energy sector, all the prices collapse. That's why here in America, it was good for us to see oil price, it means gas price, going down, which is good for us. But you understand that for our companies, that they make oil, export oil, or make oil, or drilling, or what you call transportation oil and the other stuff, they have been hit, and we lost millions of jobs. Understand that it is something good for you, but it is not good for somebody else. So you should understand that anything in the market will affect some people. Some they make money, some they lose money, even outside the market, because the market is always ahead of what's going on into the real market. Okay. Hello VJ K, how are you? And thank you for coming. How do you track the mutual funds? VJ said, how do you track the mutual funds? Now, my strategies is based on the big movement in the market. So it's my training. Okay? Most of the time when there is a trend, but a trend at the beginning, you will not see it. So there are ways to see the trend before other people. And this is what most of the professional people do, is just when they see a beginning of trend, they enter and they wait. And this is what we do in any stock, in any ETF. This is what we do. And this is what I teach. You can, Vijay, I think you are, if you are not in golden subscription, you can just order some training from 2 and 3 and 4 and 13, and you can get more information. So please, Vijay, if you are interested, send me an email. I will explain more and send you information. If you are confused, let me know. Okay. So just let us go bit by bit. So let's see here. Okay. So let's. I'm just trying to see. My website, and most of you know my website, but for the new guys, and my email, for those who want to send me an email, since we are just at the beginning of the session, I just want to put that maybe someone send me an email. Okay, let's continue, because see, guys, I am looking at the chat right now, chat room, and whenever you are writing something, I will be beginning always from the first come, the first served. Okay, not you have always someone being angry against me. Okay, so before we begin, let's drink some coffee. I'm just wake up. I have a nap, so I need to drink some coffee before I continue. As usual. Okay, so Vijay, how do you track the mutual fund? First, why you say mutual fund? Mutual funds, they have the biggest money in the market. I think mutual funds are around, they say around 40 or 45% of the whole market. So when they move, if they buy a lot of industries, they go up. If they sell these industries, they go down. This is what we call industry or sector rotation. Something it has been doing good for 1 year or two, they will collapse, and other things they have been doing bad, they go up again. This is what you call, some people they call it cycle of the market, but for me, it's not. When we say cycle, it doesn't mean each month or each 3 months or 6 months you will see something change. No, the change is always. That's why people always are confused when they want to see which industry, which sector is going up. They don't know, because all is a mess. Now, if you go, for example, and you watch major TVs like CNN, like Bloomberg, like the other big TV channels about the business, about the stock market. Now, when they give you something, okay, each day they give you a lot of news. A company go up, a company go down, but this will never help you understand what's going on. So in order to understand, you should see the price. And this is what I teach. I teach you how to see any industry, for example, any sector, any industry in the market, any index. When I just take a look at the chart, I understand where it is in the market, and there is a push for the mutual fund, yes or no. Just in this weekend, in my golden subscription and silver subscriptions, I make videos how to know sectors, okay, if they are good to buy, yes or no. I have made these lessons into my golden subscription. So guys, anyone who is in the golden subscription, you will see it. For those who are not, please join at least for 1 month or 2 or 3. You will find all the information. Next week I will do the industry, because sector is bigger. Sector is a multiple of industries. Next week I will show them the industry, how to find industries, and the other I will show them how to find stocks, because everything have the same thing. Okay, some criteria that I use are the same thing. So thank you very much, Tesla, for coming and for asking questions. And you are encouraged to ask more questions, because all these 2 hours or 2 hours and a half, we will be always answering questions. Now let's and Vijay, hello Artkov. I haven't seen you, man, for a long time. Where have you been? So Artkov is here. Rahmatullah said, how relevant indicators? So the subject of indicators is a very big subject. Now, for me, why I don't use them? Because each indicator is a small strategy. Okay? It will work in certain time condition in the market, but it will not work the whole year. That's why we have they say right now we have more than 300 indicators. You try just to study these indicators, and you can make another indicator, because it is just a sum, an addition, and division of the close of the stocks or indexes or whatever, and it gives you a line and you will see it. Okay? These are small strategies. That's why for me, my strategies are clean. Clean, it means there is no other strategy than mine. It's clean, it's simple. Whenever you use my criteria, you use what I use, you will see directly what I see, and that's it. You don't need anyone else, because you see the whole picture of anything you want to see. whatever stock I see, I'm telling you what is my opinion. But understand that when you buy, it doesn't mean it is a sure thing. And this is the problem of most of the beginners. The beginners, if you are a beginner, in your mind, you want something, a sure thing. Now, I'm telling you that a sure thing doesn't exist in the market. It doesn't mean with any strategy that you buy a stock, it will go up. No, this is not true. The true thing is there are other things you should look. There is probabilities of the trade. Okay? And this is what I teach in training level 5. If you have golden subscription, you will find it. How to make money from stocks. Because there is a formula that all the professional people, either swing traders, either day traders, either what you call investors, they use the same formula. Okay? The same. It's the same. Wherever you look, it's the same. So you shouldn't focus on on one trade. For example, you say to yourself, let's I want to make a trade. Let's say you have $50,000 or $100,000 and you put all that in one trade. Now here you raise the risk at the maximum. You can make a lot of money, but you can lose a lot of money. And this is the problem. In trading, you should never do that. You should not have all your money into one stock. Because if you do that, if something happened bad, you will lose 20%, 30%, or 40% of your money. Okay? So these people, some people, they do that. But these people are crazy. And sometimes they go bankrupt. It means they lose all their money. Let's say you buy 100,000, you buy before the earnings, and you buy calls, options. Everything you have. 100,000, you go to a stock and you buy all calls. Okay? So 100,000 is a lot of money. Now, what if the next day you have a gap down? Do you understand that you lose all these 100,000 and you find zero in your account? You find zero. There is nothing. All your money has been gone forever. So that's why I always say to you, don't make crazy trades. That's why what I teach is to teach you to manage your account and you spread the risk, not to have big problems. Whenever you have a gap down, you can have a gap down in one stock, but another stock you have a gap up. Okay? And this will never make you angry or you lose a lot of money. And this is part of the game. You should protect your money from the market. If you just don't protect, you don't manage well your market, your money, you will have problems. And that's why a lot of traders, they begin to trade. They don't succeed. They lose all their money, or most of them, and then they stop. And this is the problem. It means you are doing risky things, but you don't know that you are doing risky things. There are a lot of things that you go through. It's not just because you don't know how to trade, but because you are doing a lot of money management risks and mistakes. So my job is to explain to you with simple things how things work, how can you manage your account, and then you can begin to make money easily, okay, when you practice and you understand the strategies. So let's go, since we have finished with indicators. And another thing about indicators, they are called lagging indicators. Lagging, it means they give you old information. Okay? For my strategies, it gives you the day information. If you want to buy, you should buy on that day. This is what we call the momentum. The momentum is only to buy at the beginning of the trend. There are ways to know. Now, there is probabilities in trades. Okay, so it's not a sure thing. That's the good thing about my probabilities, because they will teach you how to use probabilities in order to make money without worrying if you have a loser, one loser or two losers, or even 10 losers. You don't worry about that, because this is part of the game. You should lose a little money. Okay, there is no one who is successful in every trade he does. This is something that doesn't work in the market. Whatever, and some people they say it's not true, because you will never know. For example, you buy stock today, tomorrow it can be going up or down. Okay, so no one knows the future. Let's go after Rahmatullah Modi. Thank you very much for your question. Vincent NC, thank you very much for coming. It's a long time I haven't seen you. You might be in vacation or something like that, or busy. Nice to meet you again. So there is another question from Tesla 3. Is there difference between strategies in terms of outcome? It means you are speaking about performance. Yes, but the problem is not only the strategies, it's you. How good you are. For example, if I tell you this, you will understand very well what I mean. A teacher in a classroom, for example, he has 25 students. Okay? They get the same information. Now ask yourself, why some students are doing excellent, the majority are doing average, and there are few who are doing bad? You ask yourself why. They have the same information. Now, when I teach people, some they succeed, some they are average, and some they lose money. It's just because they don't understand well, and they don't have the time to review or to see their mistakes. And this is most of the people they lose. Most of them, they are, in general, they are lazy. Okay? If you lose many trades, you can, for example, send me an email and say, Karim, I have this 1 trade, 2 trades, 3 trades, I lose money. Tell me if I am correct, yes or no. So when I see what you did, I will tell you if it is normal. Normal, it means you do the good thing, but it's just the market doesn't respond where you buy, which is normal, and it happens in all the markets. It happens to all traders, that you have what you call successive wins and successive losers. Sometimes you have on the row many winners. You think that you grasp the market and you know the future and you're going to boast, but one time you begin to trade and you begin to have a loser after a loser after a loser. Okay? Sometimes it is normal and sometimes it is not. When you begin, you don't have any profits and you begin to lose money 1 month, 2 months, 6 months, 7 months, it means that there is a problem. You have mistakes that you are doing each time. Okay? So what is the solution? Is you reduce your trading. If you are, for example, doing 2 trades a week or 3 trades, you do only 1 trade and you stop. You don't do any trade in that week. And then you begin to see your trades one by one, the good ones and the bad ones. Because sometimes, I'm telling you, sometimes you exit because the momentum was weak. But after a few days, the stock goes up again. And it is the real momentum, and the stock goes up. Because sometimes people, they say, oh, I exit that trade, but after 1 week or 2 or 3 or 1 month, it is a good winner, but I exit. I exit. Okay? So these problems have solutions. All the problems that you have in stock market, in trading, it has solutions. So you just correct your mistakes. When you correct your mistakes, your performance will be better and better and better. That's about strategies. Because the strategies doesn't work by themselves. It should say you. For example, we have the same strategy. For example, we find 10 excellent stocks today in the market. And we are 10 people. And each one of us bought one stock. But there are maybe 7 stocks that go up, 3 they go down. So 7 they have been successful and they continue with the trade, they make money, and the others they don't. Okay? So this is what we call probabilities. So it depends on the person, because choosing a stock is a skill that you need time to grasp. It's not just I tell you do this and do this and do this. The next day you will become a professional trader and you become making money each time. This is not true. So you need to practice. Each trader needs to practice for 1 month, 2, 3, 6 months. You need to practice in order to discover your mistakes, because mistakes come because of your the people always forgot. Okay? Forgot things. That's why in strategy you should follow the rules and you should not break the rules. When you break a rule, the momentum will be lost. Okay? So this is about strategies, and I'm telling you, your performance will change to the better if you follow rules and you never give up. It means it is this thing that you like, that you want to do. You should continue doing it until you succeed, because success is not something easy. So you should work on it. It's like you, for example, one of you guys, you have never done exercising or bodybuilding or whatever, and you just go to the gym one night and you say it's over. I'm doing it tonight. That's it. So you need months. Sometimes people need years to exercise in order to be at that stage of performance. Whatever exercise you want to do. And this is for everything. That's why when we say experience in jobs, why someone who has a lot of experience, the companies accept him better than someone who is new? It's just because he knows better. He knows a lot of things that the other guy would never see, because when you go and study, you get some information, but there are some information you can't get from what you have been taught. So always there are new things. These new things is the experience. That's why you should always practice. Okay? So thank you very much, Tesla, for your question. I will be you say, Tesla said, oil is get heated again to collapse, maybe. So listen, when you are speaking about oil, are you speaking about a stock, or are you speaking about the ETF? It means the industry or sector. Which one are you speaking about? Because I didn't check for oil. So if you can give me a ticker, it means a symbol, I will let you know. Okay? So Tesla, try to see what is the symbol that you are following, and I will put it in the chart and I will show you. Vincent said, healthcare is doing good, and I bought a few stocks in the health sector and made too much money last few weeks. Thank you very much, Vincent, for sharing your information. Now, a lot of sectors that are going up, not just health sector and the other. In this weekend, since you are speaking about sector, I have done examples of sectors and how to look at them. I know you, Vincent, you have been my student for a long time, and you know everything about what I'm talking about. But the other guys who don't know, if you are interested, you can join my golden subscription and you see the videos that I made this weekend, and you can just see how to focus on these sectors. ETFs. If you don't want to buy a stock, you can buy ETF as usual. Okay, so it's not only you buy stocks, you can buy ETFs also, which is exchange traded funds, which is just attracts, which is a stock. ETF, it is just a stock that attracts an asset. It could be an index, it could be a sector, it could be an industry, it could be a commodity like oil or gas, or it could be a precious metal like gold, silver. Everything you have an ETF for it. Thank you, Vincent, very much for sharing with us. Another question from Tesla. Thank you. I would thank you very much, Tesla, for all the questions. And we say, are the brokers part of Wall Street? Who's that Wall Street? You know, see, when we speak about Wall Street, it means those people who can make the difference in the market. Okay? So, for example, people, when we say Wall Street, it means most of the brokers, most of the exchanges, most of the people, they get money without risk. This is when we say Wall Street. And they do a lot of stuff. For example, mutual fund managers, those managers that they get, there is a manager, I think in 2016, in the year he got $3 billion as his annual income. Do you understand? $3 billion? Well, what is this job that you can get $3 billion in 1 year? Okay? So this is what we call Wall Street. It means those people who work in the market, but most of the time they don't risk anything. They don't risk. For example, a manager in a mutual fund. Does he risk something? No. Yes, he risks his job. Maybe they get fired. But if he buys a lot and the market is good, he will be getting a lot of money, as these guys who got $3 billion. So most of the time when we say Wall Street, we say the people who don't risk, but they take everything. Okay? That's in general when we say Wall Street. So Tesla, another question, is short squeeze good for swing trade? Okay. Now, before we go to short squeeze for swing trading, there is no relation. Why you are comparing two things that have no relation? Swing trading is just to follow trends in the market. That's it. You, for example, I am a swing trader. It means when there is a trend going up, I follow it. I buy when it is down, and it's going up. After 6 months or 8 months or 2 months or 1 week or two, whatever, when the trend doesn't go anymore, I will sell. This is swing trading. Now, when you say short squeeze mostly is done when short sellers short sell a stock, and then let's say in the next morning there is a big buyer who buys a lot. Let's say mutual fund or someone who is big. He buys a lot from that stock. So this is called a short squeeze, because these people, short sellers, they lost a lot of money because instead of the stock going down, it goes up. So they should buy in the morning. In order to exit this trade, they should buy. So they will help the big guy more and more to make money. And this is, it's always happening in the market. So short squeeze, that's why some people, they don't do swing trading in short selling. They don't do. They short sell in the day. When the day ends, they will buy back or cover back. That's it. It means they don't wait, for example, tomorrow. This what has happened, for example, to if I might explain what happened to Facebook and Twitter. So I will show you right now, just to explain to you what did happen. At least you understand. Okay. So let's go to the explanation. Okay. So I will just give you an idea about short squeeze. Okay. So let's say take Facebook. It was going up like this. And today here, we have here the candlestick. This is the day. This is the day where we have, it means at the end of the day, let's say the end of the day, the stock was 217. Okay. This is the price at the close. The price at the close, it means at the close, when the market closed at 4 p.m., this is where FB, it means Facebook, was. Now, this is 4 p.m. Let's say, I'm just giving you time, okay? Let's say at 5 p.m. we have the news. Now, the news was bad for Facebook. They say that they lose users, the users are not going up very fast, the earnings are bad. So what did happen? A lot of hedge funds, a lot of traders, okay, they just, whenever they heard the news, it's millions of shares are shorted. Okay, it's not only 1,000, 10,000, 20,000. So what did happen is that the price, when we have all these millions, this happens in seconds. It doesn't happen in for example, in minutes and 10 minutes, 20 minutes. No, because it was so big. So you will have here is the collapse. Now from 217, let's say the stock has been going to 200, okay? And this is just done. But most of the time, when there is, for example, the news, it comes in seconds. The stock had been in 2000. But what did happen to Facebook this time? It continued to go down until 7:59. It means 8 o'clock p.m. Okay? Now, because the people, when the stock has been going down, let's say $17, and then it continued until 165. And then, let's say, and then it stops, and then it goes up to 100, let's say 174. This is at the time at 7:59. This is where the stock has stopped. It means it has stopped and go up again until 174. Now, this here, when the stock goes up, this is what we call buy back. those people who sell millions shares short, they buy back. It means they exit the trade. So all this money from 217, all this until 165, all this is called profits. But understand when the stock is going up, they begin to buy very heavily before 759, because in 7.59 the market will close definitely, and it will open next morning at 4 a.m. Now these people will exit. They are scared to stay. What if in the morning a mutual fund at 4 a.m. and he begins to buy? They will have trouble. So that's why there is no here short squeeze. But some people who stay, they can have problem in the morning. So this is what happened, for example, Facebook last time. But in general, when we have the news, it will be very, very quick. In seconds, the stock will jump down because there are millions of shares at one time. It's very big transactions. That's why the price jumped down very quick. And this is what we call gap down. Okay? So this is just to explain this short squeeze. At least you understand it. And if you are going to short in the future, you should be aware that you have a big risk. If in the morning there is a gap up, or there is something people are buying, you will be short squeezed and you will lose a lot of money. And this loss is unlimited, because the stock, if it is 20 and it goes to 40 or 50 or 70, there is good news in the morning, you will lose all that money. So that's why short sellers, you should better do it in day trading. Okay, this is what I always say to the people who are, and I have training level 11, how to sell short a stock. You can just check it with day trading. You can just check the techniques that I use and the risk that you have if you want to do it. So let's see other questions. Tutu Perez, thank you very much for coming. I think you are here for the first time. He said, great channel, keep up the good work. Thank you very much. You know, it's the good encouragement and the appreciation of the people who are watching me and who are just sharing with me information. That's what makes me stay longer and longer and longer. Okay, and thank you very much, Tutu Perez, if you are coming. And Tutu, if you are interested, you can go to my website. There is a free training level 1 is for free. You can just get it and try just to understand how I trade in general, and then you can see my subscription, golden subscription or silver subscription, or you can just order training one by one if you are interested. Now if you need, for example, you need more information, or you are confused, you can, for example, send me an email and I will be happy to help you. This is my email and this is my website. Just take a look whenever you have time. Just take a look. Take the training level 1 is for free. You click it and you just take it for free. Now let's go to Wiseman. He has written a long paragraph, so let's drink some coffee, because see, I have a nap and just wake up, so I need to drink coffee while I am speaking. At least I can continue being awake, or you see me sleeping. So Wiseman said, Kareem, one would believe that it is out there is you should pay yourself first 10% when you get money, and add that money to what is making you money. Because of inflation, 10% is too small, but okay in the beginning. Now, when you say pay yourself 10%, maybe you are speaking about saving. This is the golden rule. I have made a video before. This is the golden rule. If you want to save money from your paycheck or your salary or your business profits, what you should do, each month you take 10% of this paycheck or salary or whatever is your money, and put it aside. You can put it in saving account, or you can put it in stocks, whatever. This is what the people say. You should pay yourself first. Because understand that all the money that you make in your life, all of it, almost all of it, is spent. So at the end of your life, let's say you are good health, you are 60, some people, they have 500,000, 1 million, 2 million, 3 million, especially when the people are like middle class or something. They have millions of dollars. They have saved a lot of money because they earn a lot of money. Now, if you go to the normal people, most of them, they don't save. It's not because you don't earn that much. It's just because you don't have this habit to save. Saving habit has nothing to do with what you make. Even if you make, let's say someone makes $1,500 a month. Someone makes, let's say $5,000. Someone makes $10,000 a month. Like he has business. Someone makes $20,000. But understand that some people, they don't have this habit to save money. They spend all their money because they have more bills. That's why a lot of people, they make large bills. Okay? And all their money is going to these bills, so they don't have just some money saved. And this is a bad thing. If you are not saving, you are in a bad habit. So saving is a habit. It has nothing to do with what you earn. Just take something and put it aside each month. And the golden rule is 10%. This, it means as if you pay yourself. What does it mean? It means when it is saved, it is yours. You can use it at any time and it grow up. Let's say you put $100 or $200 a month. This is $2,400 a year. Let's say you put $200 each month. Now, let's say you want to have a trip. You travel. You will find $2,400 waiting for you. You just take the money and go have fun wherever you want, like a vacation. But if you eat, you spend everything. When you want to go to a vacation, you don't find money. If you try to use credit card and the other stuff, you will have interest rate and you will have problems. Okay? It's the way the people they behave towards money. So there should be an education for all the people, or the new generation. Those people who are just 15, 17, 20, 25, they're just beginning their life. They should begin to understand these things, because when they understand earlier, at the end of their life, they have enough money to travel or to go anywhere in the world. But if you don't save any money, you don't have any stocks, you don't have anything that you can rely on. If you get fired from your job or dismissed or whatever, you will find that you have no money and you will be in the street, like what did happen in 2008. Because people, when the good times is, all the people are good. They don't think about hard time. But most of the people who think about the hard time, they invest and they save money and they are okay in whatever situation. So thank you very much, Wiseman, for your question, and hope I answered your question. I don't know if I am what I am saying is what you said about inflation. This has to do with the dollar. Okay, they say that it is like 3% each year. It means the dollar loses value each year. Okay, it loses value. For example, a dollar in 2000, it's not a dollar of today. You try just to see if you have been used to buy, for example, something. Let's say gas. Try to see 2000. How much you buy 1 gallon of gas. Now let's say I don't know, but let's say it's $1. If now it is $2.50 or $2.70 or 80, what does it mean? It means you are paying more with the same gas, because 1 gallon gas, it doesn't change. But what is it changing is that inflation for the dollar. So instead of buying $1, you are buying with $2 or $3. Okay, so this is what we call inflation. Thank you very much, Free Trader. Hi, how are you? Thank you for coming again, because I think I have seen your YouTube ID. Thank you for coming. Now, as I told you before, don't be mad at me. I am trying to answer all your questions, but one after the other. So the others who have questions waiting, so just wait, and I will, if God wills, I will answer all your questions. So just wait. Now, Rahmatullah Modi said, what is good support for Facebook? Oh man, Rahmatullah, how can you ask me this question? No, you are my student. I have made videos about my trades in the golden subscription. You are my student. You should go to the videos and watch, or you send me an email, because for me here, I am sharing some information, yes, but I am not giving like a training. I don't train here. Okay, so I'm trying to help as much as I can. So Rahmatullah Modi, I think you are in golden subscription. You can check the video that I put in the weekend today. I think today, or send me an email and I will respond back. Okay, so I'm not going to give information about trades in this live session. Thank you very much, Rahmatullah. Send me an email. Now, Clown with Twitter account, thank you very much for coming. Today you come a little late. Thank you very much for coming. So, Clown with Twitter account, he says, in which case do short sellers start to cover so heavily? No, see, I just, you weren't here. I just explained about short squeeze. You say, in which case? No, when they want to finish the trade, they cover back. And most, let me give you an example of the, just an example from, I will show you just the explanation, and then you can understand what's going on, okay? So, let's go and explain this. Okay. Let's say it's 9:30 in the morning, 9:30 a.m. And let's say yesterday here candlestick, this is this is yesterday. And the day it was good, it ends, let's say, at $20.30. It was good. But today, at 9:30 a.m., the stock was going down. Okay? Let's say it begins the same as $20.30, but it was going down. Now, then you see that the stock is going down, so you short sell it. So here you sell short because you think that the stock is going down. Now here depends on the stock, and it depends on you when you want to exit the trade. This is here. Exit the trade. It's you who should decide when you exit your trade. Now, when you want to exit the trade, since you sell the shares, let's say here, you buy them again. Now, when you buy them, what does it mean? It means you exit the trade. It means you are out of the trade. Let's say you make 50 cents in this day. Okay? And the stock here is 1980. Okay? So the stock has been going down. So you make 50 cents for each share. Now, it's you who decide to buy back. Not one else. It depends also on the stock. If it continues the whole day or just a few minutes. It depends on you what you are doing. Let's say 1980 is 11 a.m. and you exit. But what if the stock has been continuing to go down and it goes to $18? Just an example, okay? Here at 4 p.m. 4 p.m. the stock has been at 18. So instead of making 50 cents, okay? So how much you are making here? You are making $2.30 a share. So this we give the idea that the stock has been going down until 4 p.m. So before 4 p.m., when the stock is nearly $18, you should buy back your shares and you are out of the trade and you have your profit. This is how do you exit the trade. So all these are techniques that you should use. If you are interested, you can check training level 11, which is how to sell short a trade. You can find in golden subscription, you can find it. Or if you don't want to have subscription, you can just go to training level 11 about selling short. It's about selling short. It gives you ideas how you do that. You can also, if you want to go long, you can use training level 12, how to day trade. It means going long. And those two, training level 11, level 12, are about day trading. Okay? So this is just how. If you need more questions, please ask and I will give you more information. So thank you, Clown with Twitter account, for your question. Now Prince Singh, he said, "Good morning, sir. How are you?" Good morning. I know I think you are in India. It's morning for you. Here we are at night. And now I think it's 12:08. We are at midnight. We are night here. Thank you very much, Prince, for coming. Now, Clown with Twitter account said, "In which case I can't find a buyer for my stock." In which case I can't find a buyer for my stock. If the volume is so low, most of the time you get squeezed It means uh, it is better to find high volume stocks. It's better for you. Okay? High volume stocks, it means you will not have the problem, because market makers, when there is a high volume, what they do transactions very, very quick. Okay? They don't need time to do it. There is only 1 cent between the bid and the ask. That's why if you are a day trader, most of the time try to find high volume stocks. It means you will be at ease. And it depends on how many shares you are buying. Are you buying 10,000 shares or 20,000 shares, or you are buying only 100, 200? So there is a big difference. When you say in which case I can't find a buyer, it's not you who find a buyer, but it's the market makers who matches buyers with sellers. If the stock is having high volume, you will exit very easily. Either selling short or going long. It's very easy to buy, to sell, to exit. You can do it. You can do it if you want to train yourself. You can do it with 1 share, and you try to enter, sell short a share, and then buy it again, and you try just to practice. Okay? Don't go heavy until you understand the process. Okay? And it should be in the day trading from 9:30 to 4 p.m. where there is all the traders are doing actions. Don't go to after the market close and you try to short, sell, and then you get squeezed, and you will find no buyer or no seller, and you get stuck there. This has happened, and it will happen. So for you to become like better, if you are doing day trading, choose high volume stocks. This is better for you. Either you buy 100 shares or 10,000 shares. It's when you are good with volume, stocks are good. That's why the day traders, they go with high volume stocks. If you go to stocks that have 2,000 volume or 1,000 or 500, you will get stuck. If you either you sell short or you buy, you get stuck in these stocks and you can't trade. Okay? Now, maybe WTI. I have seen this stock before. Yes. See, we have 3,400,000. The stock is very small. Okay? Now see here. See, all this we have here like 1 week. 1 week and the stock is shorted. But in order to do good, you should at least do day trading. Don't do swing trading, because swing trading, okay? Let's say you are here, you sell short, and then you hold for the night, and the morning it was up. So what will happen to you? You will lose the trade, and you will pay, and you will buy back, you will pay back or buy back with expensive. Now, another problem: what if there is a gap up? Okay, that's why avoid. This is my question or my suggestion: avoid doing swing trading in selling short. I have made if you go to training level 11, clown with Twitter account, if you go to training level 11, you find the training how to sell short a stock. it will give you a lot of information about risk, because selling short is not the same as going long, because the risk is unlimited. Unlimited the risk. But in going long, the risk is what you paid. That is the risk. The maximum risk you have is that what you paid. It's like option. When you buy options, like options, or you buy, for example, you buy calls or puts, what you put, either you make money or you lose money. So it's very good. Okay? Because although you risk 100% of your money, but this is what you lose. You don't have to worry about to pay more after the trade. But in selling short, if you are selling short and tomorrow there's a gap up, man, you will not just lose your money, you lose many times your money. And this, you will be bankrupt, because the broker will ask you to give all the money that you lost. And this is so bad. That's why for my students, for all the people that I teach and I share information in YouTube, I say always avoid selling short in swing trading. You shouldn't hold for the night. You should just do the trade and that's it. If you are good at day trading, you should do it. And it's very easy. It means when you sell short, it's like buy long. But if it is in the day, you can exit very, very good and you don't have problems. Another thing I'm telling you, clown with Twitter account. Be careful of these small stocks, because they can move it very, very quick. It can be moved very, very quick because the stock is small. Okay? During the day, it can be moved so quick. So thank you very much, Clown with Twitter account, about your about the stock that you show. Now let's go to Vincent. He said, Clown with Twitter account, you lost a lot of money with your stock OSTK last week. Did you get out? Oh, you still remember? You still remember with this, with the stock OSTK? So we have spoken about this stock last time, but I don't know what he does. Vincent, Clown with Twitter account, you made a big mistake, didn't you? Now, see, mistakes, if you calculate your risk, it is not a mistake. You lose a trade, that's it. But you don't, the problem here is you should never put all your money and you gamble with a stock. Let's say you have 10,000, you have 20,000, 100,000, 500,000, and before the news, you put all your money and you wait and you say, "Oh, God help me to get a gap up, and then I make a lot of money." This is a stupid thing some people do, and it is a lesson. It's a hard lesson for me. When I'm sharing my information, I don't want you to learn something with a hard way. I want you to understand this before you get into this trap. That's why all my training that I do is just to enlighten you about the market, how it works. At least you will not do big mistakes, because there are small mistakes, there are big mistakes. Okay? So cheaper, let's say, where is the cheaper set? Where is it? Oh, it's a lot of questions and I can't make it up. So please, guys, I know there are a lot of you guys. You put your questions, so I will go one by one, and I will try to answer all your questions. Okay? So, Cheaper said, Karim, you should consider teaching options in more detail. Leverage. Now, see, Cheaper, thank you very much, but options, you can use options with my strategies. It means you buy and you sell according to my strategies. But understand that options, you are risking all your money at once. So it is very dangerous for beginners. That's why I don't put too much emphasis on options. I put only options that for a beginner to understand all the things related to options and how does it work, and that's it. So that's why I don't want to go further. I am more for swing trading than for options and so on. But thank you very much. And the leverage thing like forex, like options, like futures are very, very risky. A lot of people, a lot of brokers, they advertise because they can get a lot of money from these guys. All the guys, most of them, they lose all their money. Not in stocks. Stocks is better than if you do what we call forex or options or futures, because the brokers, they say you don't have to bring anything. You bring just $500, $1,000, $2,000, but they don't. But the beginners, they don't understand that they will lose it in one trade or two or three. They will lose everything. And the broker, they don't care. It is just when you trade, they take commission. That's it. This is what they want. They want you. Even if you have $500, you bring it to the market. They don't care about what will happen to you. And they don't teach and explain the risk. They will never do that. Because if they show you the risk, because they know the risk, if they show you the risk, you will not trade for currency pairs or options or futures. You will never go there because it is too much risk. Okay? In a stock, whatever you lose, it's not the same as options. Options, most of the time, if you lose it all, or you lose half of your money or all your money. And understand that it is not you put $500 or $1,000. What if you put 5,000, 10,000, 20,000 in some calls or puts, and then you lose? What did happen to your money? You lose it all. So it is something that it is dangerous. That's why for me, I am not going to push people, beginners, to go to dangerous trades. My job is to let them experience trading or investing for the long run. It means they can make money in the future, not to lose all their money at once. So that's why I'm not doing that. Even brokers contact me to help them have students, have customers, and for cryptocurrency, for options, for futures, for currency pairs, for whatever. So I don't like that. That's why in my channel, when you watch all my channel, you don't find a video I made about options and they say, okay, go and do options. No, most of the time I don't. The MD trader, how are you? You say, long time, Karim, hope all is well. I miss you, man. Where have you been? It's a long time I haven't seen your YouTube ID. Now, Clown Twitter account said, why those are heavily shorted? Is it because the disruption of political hidden agenda. Now listen, there are a lot of hedge funds and a lot of big traders. They bet on a company when things are worse for this company. They just bet. They say, because these guys, they search in the financial of the company, and they find and they follow by professional people in the business. Okay, I give you an example. Clown with Twitter account, at least you will know. For example, Sears and Giuseppe. Before, when the stocks are going up, I have been trading them very heavily. It means I trade them always because they do good, especially Sears. Now the stocks are $3, $2, $1. What did happen? It means we know that these companies are doing bad and they lose business. That's why their stocks are going down and down, and I have made videos 2 years or 3 years ago when they begin to go down, and they say, and I give an alert, and I say that these stocks are going down. Like Twitter before, when it was $74 and then it goes to $13. I told the guys from 74 when it was going down, I told them, and I put videos. If you go to my channel, you will find videos when I say bad about Twitter. I say Twitter is going down and down and down, and I show you information and videos after each 2 weeks, 1 month, 2 months, 3 months, 6 months, 1 year, 2 years, 3 years. I follow Twitter, I follow Facebook, I follow Apple. I follow these stocks for a long time ago from their inception. Okay, so I follow them a long time ago. So that's why I know more about them. Now, political disruption or something like that. See, don't go into politics, because if you want to make money from politics, it will not gonna happen in the stock market. Stock market are interests. It means everything is related with the mood of the market. Sometimes some companies are doing bad, but the stocks are going up. Can you make it? Can you think about it? So it happens always, things that you can't have a reason by politics or by disruption or by theories. So don't waste your time about that. If you want to make a strategy about politics and news and something, you can do that, and you can search. And if you make it, you can make money. Yes, you can do that. But for me, I am not into news and politics and something like that. I don't watch TV. For me, if you tell me, what do you think about this stock, I will tell you directly by the price. I don't care what the politicians are saying, or the company what they are saying, or analysts what they are saying. So you understand that I have no way to look at the news, because people, they can lie. The price never lie. Cheaper said, ability to bring in immediate income by selling options, manage your losses to avoid 100% loss. You can sell when you lose 50%, for example. I can buy 100 shares of Apple for 300 opposed to paying. Yes, you are speaking about what you do with options. Okay, you are speaking about options as very easy. But if you buy, what is your account? Cheaper, tell me, what is your account? Are you going to buy only one call or one put with $300? This is what you are telling me. Now let's say you want to buy more. Let's say 15 contracts for Apple. It's $5,000. Now, if you have a gap down, all your money will be lost. $5,000 will be wiped out. So you are doing a more risky trades, 100% risk. And this calculation you are doing, okay, if you can make a strategy and it works for you, that's okay. But I'm telling you, for beginners, most of the people, their accounts will be wiped out, because you are not going to buy one contract with $300. Now let's say you make $20 or $30 or $50. What is this money that you make? Are you looking for $20 or $50 from options? It's not. So in order to make money, you get tempted to buy more contracts, and this is the problem. When you buy $5,000 from contracts, when you buy $10,000, for example, in your account, what if you have all the contracts are calls and you have a gap down? All your money will be wiped out. So understand what I am saying. I'm trying to speak about the risk. Now you are speaking about to buy cheap, but Wall Street guys, when they make this selling calls and puts, why they do that? It's because the chances of losing is higher than chances of making money. It's not like stocks. Stocks, you can buy a stock, you wait 1 month, 2 months, 6 months, and you can have a lot of money. But in options, you buy the time where you stay. It means if you buy a contract, you are buying 1 month, or you're buying 2 weeks, or you're buying 6 months. You are buying time also. Okay, and this is a real problem. But it's cheaper. If you are interested to continue with options, it's very good for you. And if you succeed, it's very good for you also. But the success rate in options is very little. And those who are doing, and don't think about those mutual funds and hedge funds. They use a lot of strategies like they buy stock long and they use puts in order to hedge. These are stupid things, because the money, it's not their money. They play with other people's money. But when it is your money, it's a different thing. It's a different story. Thank you very much, Cheaper, for your question and your explanation. Wiseman said, thanks, Kareem. You understood my last comment perfectly. Thank you very much, Wiseman. I'm trying just to, because I know this expression, you pay yourself. I have heard about this, and I make videos. Cheaper said, you can also hedge by buying puts or selling calls. Yes, but when you hedge, you are going in two opposite directions. You are not going to make money. It's like when you hedge, it's like when you're telling me, you are, let's say, in Georgia, here in America, you are in Georgia, and you are telling me, I am going to New York in the north, and I'm going to Florida at the same time. This is what do you mean by hedging? Okay? The market doesn't play with the direction. The direction is everything. If you play the opposite sides, you will lose money. You are not going to make money. Because if you buy long and the stock goes long, your hedge will be lost. If the stock goes down and you make calls, what did happen? Your calls will be worthless. So you understand? So you are just playing with strategies that doesn't work. All these strategies you find in books, you find in videos. Go to videos on YouTube. You will find thousands of strategies that are stupid. If you make them, I'm telling you, try to do them. If you succeed, you send me an example. Cheaper. I'm telling you here. Okay, just send me an example what you did exactly and you succeed to make money. Let me know. Okay? Because the success rate is so little and cheaper. Here is my this is my this is my website. Cheaper, this is my email. Send me a trade that you do this strategy and I will let you know that most of the time 99.99 you are going to lose, because you are playing on two different directions. The market doesn't work with two directions. Facebook, for example, or Twitter or Apple or Google or Tesla, when there is the news, either there is a gap up or gap down. There is no gap up and gap down at the same time. And if you succeed in one thing, send me the trade, what you did, and I will tell you most of the time, 99.99, you will lose your money. Or you don't make money at all. Okay? And hedging is done by mutual funds. And because when they see the market is going down, they try to hedge. But when the market goes up, all these calls or puts they buy, they go worthless and they lose a lot of money. Okay? It's for them, it is just to be in the same place. This is what we call hedging, and this is done, and the managers, they do this to avoid very high losses. They want just the average, and most of the time they don't make money. Sometimes they lose money because they can't hedge all their money. They can't, because if you hedge all your money, if the market goes up or goes down, you lose all this money. So you understand? You lose it all, because options are not for long investing. It is just for days, or 1 day or two, or days, or 1 month or two, if things goes good. It's not for investing. Okay? But thank you, Cheaper. Thank you very much for your explanation and for sharing your information, and I appreciate that. So I told you, if you have an example, send it to me and we can discuss it on private. Now let's go to Clown with Twitter account. He say, Vincent, I am still hoping that come back. That's very good. What is it? Ah, the stock. That stock that comes back. What's this stock? Let me see. I forgot the name. I forgot. Let me see. Okay, I'm trying to look for the stock, and I will just check. I think I missed the stock. I'm trying to see the chat room. Where is this stock? I don't know where it is. OSTK. I will try to check. So, let's see. From 47, it goes to 30. Okay? So, it's a big, here it goes from 38.60 to 37, and then it goes down. And now it's going down, $17. And what's this stock? Okay, as I can see. So I don't know where is your stop loss or where you want to exit. So it has been going down so bad. It's nearly going down to where it was in 28 June or 28.15 is 30.03. So it's nearly going down from all this time. Okay, so let's go to another question. Okay, let's see where we are. Clown with Twitter account, you say, Vincent, I am still hoping that comeback. Okay, I don't like this word hoping. So Twitter with a Twitter account, I don't like this idea of hoping, because hoping, you don't have a plan what you do, and this is a problem. Now, what if the stock continues to go down, and it will never go up? When are you going to exit the trade? And it seems to me, when I see after the gap up, I don't know where you bought it, but after the gap up, the stock has been going down too much. Even the gap up, it has been going down, and this is a bad sign, because the gap up was high, and then at the end of the day it goes down. It's like Twitter when it did last time. So for me, most of the time, I'm telling you, most of the time, not all of the time, if the gap up is not strong, it means in the day of the gap up, when there is a gap up, if the stock is strong, I will hold it, but most of the time I will sell it in the morning. Okay, I sell it in the morning at 9:30, or I begin to just to open and see what's going on. Is the stock going to be going up or going down? If the stock continues to go down from the open, it means there is no chance that the stock will go up. So I will just exit. Now, Bilbil Muja or Muya, sorry for the pronunciation. Thank you very much for coming. Thank you, and thank you for asking the question. So before I answer your question, let me drink some coffee. Can you explain how the stop loss work when the Facebook price dropped? If you had a stop loss, would that work when the market drop? Doesn't stop loss work? Thank you. Now, Bilbil Muya, I will just explain to you right now how the stop loss work, and if you want in the future to exit, what you should do. Okay? So let's go to the explanation. Okay. Now let's take the example Facebook. Facebook, this is the day of the news. Okay. I just give you Facebook because it's very famous, and I will show you. Let's say at the end of the day, this is the day where we have the news after the market close. The market has closed, let's say at 217 something, but at 217 at 4 p.m. Now let's say you, before the market close, you put a stop loss at 215. This is your stop loss. Okay, stop loss at $215. It means if the stock goes down. Now, stop loss, when the stop loss work? The stop loss work from 9:30 a.m., it means the trading day, to 4 p.m. This is how the stop loss work. It work in the day trading. It means it's trading day. It means where the market is open market. When the market close, it stays open for another kind of trading. This is from 4 p.m. to 8 p.m. This is what we call, let's say, after hours trading. After hours trading. Okay? Now, stop loss doesn't work after 4 p.m. Okay? So whatever happens here from 4 p.m. to 8 p.m., it doesn't work. So it doesn't work your 215. Now, if you want to do what? If you want to exit the trade, what you should do? After 4 p.m., you will be watching for example, you open your broker and check the price. The price, let's say it was 217, 217, 217. And then you see that the stock has gone to here. 200 in just 1 second. Okay? What you should do, when there is a gap down, you can here exit with a limit order. Limit, you put limit 200, which is the bid, whatever the bid is, and you exit the trade. But understand that the stock doesn't go down little by little, little by little, little by little. It is a jump. And your 215, it doesn't work because this 215 works in the day only. So now let's say the stock was going down just little by little, little by little, little by little. You can decide at any price, for example, 217, 215, 214, 213, 210, and it's going down to 10 like this. If it is going like this, you can exit at any time when you watch the price. After the news, you should watch the price. But believe it or not, from 217 to 200, it takes only seconds. You can't see it. You just find that the stock has been gap down. Now, why it takes only seconds? Because there are a lot of hedge funds, a lot of traders are just waiting for just the news, good or bad, and then they put millions of shares at the same time. So it is a big transaction. When there is a big transaction, the price will jump very quick. It doesn't take seconds. And you can do this experiment from next Monday. Try to find stocks that gap up and gap down, and look after the market close and watch this stuff. You will be astonished that you see that this can go very, very quick. So in order to exit, you can use your limit order. When you see the price going down, you can exit. But understand that sometimes the stock goes down, then it goes up. So there is always a problem with the stock. Okay? So you can't have a rule. There is no rule, because after the market closed, there is big transactions that happen, big transactions, so it's very hard. So let's continue and hope Bill Muya. Okay, hope you have understood how things work. Okay, and if you have more questions, please ask. I have another question from Trump D Stock. Thank you, Trump, for coming, and thank you always for coming each session, asking questions and sharing information. Thank you very much. He said, "Hey Karim, how is life in New York? I am planning to move and rent a big house for my princess." Yes, that's very good. North Carolina is very good. We have the beach, you have the mountains, you have the plains, you have the big cities, you have the and it is the North Carolina is the place of gold mines. That's why I'm interested. So you come and search gold with me next time. So another question. Let's say who is asking right now? Let me see. Sorry, guys. We have a lot of questions. So as I told you before, don't worry. If you are here with me, I will stay as much as I can in order to answer all questions. So if you have put a question right now, don't worry, I will answer it before we end the session. So let's okay, Jojo. We have a question from Jojo. Thank you, Jojo, for coming, and thank you for being here. Can you please pick 4 or more best stocks to trade and show them to us in 52-week high and how they look like, and explain why they are the best? Okay. So, Jojo, I'm trying to tell you something about what we are doing here. Here, I'm sharing some information, but I am not going to train here. I explain a lot of things that the people that doesn't know, and the people they have difficulty to understand, but it is not a training session. Because if it is training session, I should be paid for that. So there is no one who is working for free. Okay? There is no one, and it is not a church giving something for free. So, Jojo, what I ask you to do is very simple. Go to my website. You have the first training, which is for free. Now, you will find my strategies, general information about my strategies. If you like them, you can go to my subscription, which is very, very cheap. Silver. You find 5 training. It shows you how to search for stocks, how to find good stocks with examples, and it will teach you all the things about searching for stocks. This is silver. If you want to save more money and you want the whole strategies, 13 training levels, please go to golden subscription. Okay? This is just a way to discover all my training, and then you can ask questions. I make videos for you in the subscription area. Or you can just, if you don't want to do subscription, you can just go and order training level 2 and 3 and 4. And you order as you go, you order. And there are ebooks also. If you can't afford this, you can go do ebooks. So here is my email. Okay? Here is my email. At the end of the chat, please check. Here is my email. And here is my website. Just go and check the free training. And then if you need, if you are confused or you need information, please send me an email and I will explain more. But understand, Jojo, that here I am just explaining general things about my way. It means I'm always teaching trading, but it is not my training per se. It means how to search for stocks, to put stop loss, to follow the stocks, to follow trends, how to arrange or manage your money account. All this is our training that you should learn, you should practice. So it has nothing to do with what I am doing right now. Okay? So thank you very much, Jojo. And if you are confused, just send me an email and I will help you more. Trump said, small stocks like $30 stocks, what's considered small? Now, for me, just in general, the more the stock is smaller, the more the risk is. That's the rule. For example, if you are trading a stock that it is $1, it's more risky than trading a stock that it is $20, because the smaller stocks, they move faster up and down. Okay? And they can be manipulated very easily because the stocks are small. Okay? Now, Facebook or Apple or Twitter or Amazon, you should have money, big money to move Amazon, for example. Okay? Billions and billions and billions of dollars to move $1 or $2 for Amazon. But if you have 1 billion and you put it in a small stock like $1, what will happen? A stock it is $1, it goes to $200 in 1 day. You see that? You see how things are changing? So Trump, you should find what are the stocks that you like best according to your account. If your account is small, you try to buy smaller stocks. Okay? If you have 100,000, 200,000, $500,000, you go with the stocks that it is $100 or $50 or $200 or $500. It doesn't matter because you have money to buy. So all depends on your money, how much money you have, and what do you like, and the risk you want to do. Because if you are doing penny stocks, it means you are going to do more risk in your trades. So understand that. That's it. So for me, I don't have a preference, but I can buy a stock that it is $2. I can buy a stock that it is $200, $500. It doesn't matter for me. It's just I like a stock that I like, I buy it. Okay? So it doesn't matter how much it is. Now, another question from Trump. You say, I only trade with my own money. I don't the broker money. Sometimes they can be involved in my positions without permission. No. See, listen. Trump, you said in your question that your broker can be involved. No. It can never be involved. If you have something, if you have an example, please just give me an example. For example, you bought 500 shares of Twitter, and the broker, what does the broker do? The broker doesn't touch your shares, it doesn't touch the price, because the price is from the exchange. So the broker's job is only to have the commission from you. That's it. And execute the order that you did. Now, if you have seen something wrong, you can give me an example. If you don't want to give an example here, you can send me an email and you can explain to me what did happen. Because you can call your broker and if there is something serious. But in general, I'm telling you, your broker will never touch any share of your shares he will never change the price, because he can't. So I don't understand how the broker can be involved. Now, the broker can be involved if he asks you, for example, he asks you to buy a stock. Oh, and he says it's a good stock or it's an IPO, and buy. He will be involved to ask you to buy. But it's you who do everything. You buy, you sell, it's you. The broker, I'm telling you, he has no relation with your stock and your purchase and your sell. If there is an order that it is not executed, most of the time it's not the broker, it's you. You misuse the broker, you misuse the orders, you don't know how to use them. This is your problem. Most of the time it's not broker problem. So Trump, if you have some example, an example that happened to you, you can either tell us what is the problem, and we can just try to discuss it. Okay? Maybe other guys have been the same problem as you. So for me, I have never in my life, I trade, sometimes I trade thousands of stocks a year. I have never seen a broker touch my trade or buy or sell or took my shares, or no, I don't think so. And you say, is Wall Street the king of the market? No, when we see the Wall Street, we mean the people who don't risk their money. All the people who are involved in taking money, like the exchanges, they take a lot of money because all the brokers, they pay the exchange. They hold all the information, they hold all the programs, everything. When you buy, when you sell, market makers. So all these people are called Wall Street. But understand that if people are buying for a long 1 year or two, and you are buying with them, you make money also. Okay? So that's it. That's in general. Duna has a question, and Duna, since we have spoken in private about what you are doing, so Duna, you should, since you are my student, you should send me an email and we will discuss that, because this is complex. When we say to put stop loss on your long-term investing, this is a complex question. Okay? A complex. It's not, if I give you an answer right now, it will not help you. So I will tell you the context when to put a stop loss. The context, it means when exactly to put the stop loss. And since you are my student and you are following me and you are my student, I will explain as much as I can and by email, because it's something private. Okay? So thank you very much, Duna. Just send me an email and we can deal with that. Cheaper said Tesla highly shorted stock. Jim Shanos says Tesla will go to zero. Now, let's see Tesla what is doing, because I didn't see it for 1 week or two. Let's go to Tesla. I guess. Now, let's see here. Now what I see, you see here, okay? You see here. The stock is going up and down, up and down, up and down, and it has always a lot of gap up and gap down. Now, for me, there is no trend here. A trend, what does it mean? It means Tesla is not doing a trend. So it is going zigzagging, going up and down, so no one knows. This is one thing I'm telling you. Now, second thing I'm telling you, cheaper. is that Tesla is a stock or a company that it is analyzed a lot about analysts. It means they focus a lot. So that's why there is always gap ups, gap downs, because the people are predicting things for a stock. Now, when he says this, Jim Chanos say Tesla will go to zero. Okay? It means he knows the future. Are you telling me that someone, whatever is the one, Jim Chanos, this, I don't know him, I don't know. I don't watch TV. You are watching a cheaper, you are watching entertainment. These people, if you follow this, let's say you follow these people, this Jim Chanos, and let's say you buy puts, you buy 10,000, 20,000 puts, put options, and you think that the stock is going down. Now, let's say the stock gap up. It means go up like you see, gap up, gap down, gap up. Do you know what happened to you? You put 10,000, 20,000, it is gone. Your account will be wiped out. So I'm telling you, try not to follow entertainment, because when you watch TV, this is entertainment. Do you think that someone will know the future? Is he God, for example? He knows the future, he knows everything. So, this is just entertainment. What if Tesla, after 2 months or 3 months, it goes up and it makes a trend and it's okay? What did he say? All the people who follow him, they will lose a lot of money. And these people are just for entertainment. It's not, they should never advise you what to do. Even me, I never advise people to buy or to sell. You should never advise people like this guy or to follow people who ask you to buy or sell. Now, for me, when I teach, I show you the way and I will show you the probabilities that when you do the trade, there is no prediction. If it goes up, we make money. If it goes down, we exit the trade. There is a probabilities in that. We don't see the future. I don't see the future and no one will see it. So cheaper, try not to watch too much TV. And why they speak about Tesla? Do you know how many stocks in the stock market? We have 24,000 stocks and mutual funds and ETFs. Okay? So why they speak only about Tesla to go to zero? Why they don't speak about Amazon or Google or Facebook or whatever? Why? It's just entertainment. People, they like that someone shows them what to buy. And this is not to have responsibility in your trades. Because when you follow someone and you buy the same as him or as her, what you are doing, you take responsibility from you. It means you are not going to say, oh, it's me who have bought the stock. Oh, you say it's that guy who tells me to buy the stock. Okay? It means as if you are not responsible. And this is a naive way to look at the market. For me, I don't teach people to follow me, to follow my trades, or to buy as I buy or sell as I sell. No. I always say you should learn, buy your own stock. If it goes good, you make money. If it's not, you exit. You make another trade. That's it. It's this how we make money. Now, Duna said, Turkey is having some challenges right now. Should we short tour? I don't know what is this tour, but should we short tour? Is it to stock this tour? Let's see. Let's see this tour as she wrote. I don't know. I share Turkey Investable Market Index Fund. Oh, okay. So I understand now what you are saying. Now, Now, Duna, what did I tell you? If you were here, I don't know if you were here, but what did I tell you before? That you should not sell short a stock for the long run. It is a big risk. Let's say Turkey has good news. Do you know what will happen? You will have a gap up. If you are shorting and then you have a gap up one day, you will lose all your money, and maybe you lose more money that you have. Now, if you want to do, for example, to do like an experiment, you can do that. You can do an experiment. But for me, I don't short sell stocks into a swing trading. Politics change. And the market in Turkey, if it's going down, it doesn't mean that it can go, it continues to go down. It might go up. Okay? Qatar, for example, gave $15 billion for Turkey. It might be changing the way the stock market is, and the stock market will go up. So try not to play with politics and try to make politics and you make predictions. Here you are doing predictions, and for me, I don't do predictions. I don't tell you that this stock will go down, will go up. I will buy it according to what I know, but there is no prediction. The stock might go up or go down. Okay? So this is what I believe in. Now, Trump said cheaper, Tesla will not go to zero. No, going to zero, it means bankruptcy. And yes, there are some stocks that go into bankruptcy. Yes, but it takes years. It takes years. For example, when you see Sears, when you see JCPenney, they are losing a lot of money. I don't know. They were Sears, for example, was $195 before. Now it is, I think it's $3 or $2. You see that? It's going to bankruptcy. I don't know when, but maybe they are preparing to go. So if you have money there, maybe you lose it. But this goes into many years, not in one day or two. Okay? Cheaper said, we will see Trump. So, cheaper, when we say we will see, what do you mean? Now, you make a prediction. You can be right, you can be wrong. I make a prediction. So it's not something that you can rely on. If you take any stock and you say tomorrow, is it going up or going down? No one knows. It can be going up, going down. Is this a strategy that you are going to make money? No, it's not strategy. You can speculate about a company financial thing, and you go long or you short. Yes, you speculate. You try to study this company, see what's wrong. If you think that there is wrong and the stock is going down, you can make a speculation. This is based on facts, on information. It's not prediction. Prediction is easy, and there is no result with prediction. Okay? Now, Tesla 3 says, is the market rigged? You know, the market, we have a lot of participants in the market. It can go up, it can go down. It depends on who is buying, it depends who is selling. So you should follow a strategy in order to know what's going on, what's going down. In this Tesla, in my golden subscription and silver subscription, I make videos how to know the sector ETFs, if they are good or they are bad. Okay? And if you want to buy them, what are the criteria that you should see in order to buy them? And when to exit if they are not going good. This is what I explained in this golden subscription weekly lessons. Now, Cheaper said short sellers are supposedly smartest guys on the Wall Street. Yes, short sellers is when you see something in the day and you take advantage of that. Sometimes the whole market is red at the beginning of the day. So people, they just go and take some stocks and they see they begin going down and they do it. It's the same as going long. When you see the whole market going long, most of the stocks go up. This is the work of day traders. If you like day trading, you can do that easily. You need to practice, yes. And Cheaper, I have training level 11 and 12. How to sell a stock short and how to day trade using candlesticks and chart. This help you finding techniques on how to do that. It's feasible. Now the MD trader said, Karim, talk about adding more shares when the stock is going up. Should be a good discussion. Yes, see, here is the rule. I'm telling you the rule. When you buy a stock, let's say you buy it today, after 1 week or two, you see it's going up, you want to buy again, it's okay. But if the stock, the second buy, it is a new trade, so the stop loss should not be the same as the other one. Because if the second trade, the stock is going down, you should exit. And maybe you exit everything. This is how things work. And this thing have techniques. Okay? It has techniques how to do it. It's not just to add and to leave. What if the stock is going down? The new buy that you buy, the second purchase, if you buy and then the stock go down, you will lose some money there. But if you leave it, it can go to the first purchase and you lose a lot of money. So here, you should need how to follow the trend is very, very important. The MD trader, I don't know if you have training level 7, so please, if you are interested, you can go to training level 7, or if you don't have it, you can go to golden subscription. You subscribe and you go to training level 7 and you study it, and if you have questions, I will answer your questions and I will explain more and more. Especially when you are a golden subscription, I will make videos for you to explain how to do it exactly and what are the risks. Okay? I will show you what are the risks. This is because the techniques, there are many techniques that you should be aware of. It's not just to add and to leave, because sometimes you add, the stock will be going down, so you lose a lot of money from this addition. Okay, so there are techniques that we should use. So if you have a training level 7, just go to it and study it and ask me questions by email, and I will answer you and clarify all the things. Thank you very much, MD Trader, for all your questions. Thank you. Tesla said, is there a strategy that combines earnings with short float, for example? No. Tesla, people who short, okay, they have no idea what will happen in the news. If the stock is going down, in a gap down, they will make more money. But if there is a gap up, they lose a lot of money. That's it. Because the news, you will never know if it is good or bad. That's why it is called news. And you you can't beat the Wall Street guys. When they hear the news, it is seconds and there is the gap down. You see it. You can do that by experiment. You can just go after the market close for any stock that gaps up and gap down, and you watch and you see in second, you will see the gap down or the gap up. You can't make it. You can't just buy with them, because it is going little by little, 1 minute, 5 minutes, 10 minutes, 20 minutes, and it's going up. This, it will be easy for any stupid person to make the trade. That's why the other guys, those who just make a prediction, it's just gambling. It is just gambling. They make a prediction the stock will go down, it go up. They make a prediction the stock will have a gap up, it has a gap down. So you can't make it. So don't play. I told you before, Tesla, what you are going to do, what you want, you want a sure trade. It doesn't exist. I'm telling you from the beginning of this session, there is none. You want to make sure you add some criteria and then it will be in your favor always. No. It can happen one time, but the news, you will never know. So Tesla, stop using this mindset, because you are not going to use probabilities. If you use my probabilities, you will forget about this sure thing. You should use my probabilities better. Tesla said, have you been contacted by your broker to promote something? No. No. Tesla said, have you been contacted by your broker to promote something? No. Listen, my broker, I have no relation with my broker. No relation. For me, I have my account. I buy and sell. The broker takes commission. Because for me, even if someone asks me about my broker, which is E-Trade, they don't give promotions to people to speak about them, or to give, for example, you say, oh, apply for E-Trade. No, I sometimes be against E-Trade because the commission is so high. Because before it bought Options House. For me, I was with another broker which is simpler, with easier, and the broker was doing commission which is cheap. But when it was bought from E-Trade, what did they do? They raise the commission. But for us, we are old customers. They don't raise. Our commissions. We stay with Options House commissions, so it's good. But the new traders, they ask them to pay more. Like, I think it's $6.95 or something. It's too expensive, because most of the market is $4.95. Most of the brokers. Okay, so there is no big deal if you go with E-Trade. There are some who who like ETFs. Sometimes it is for free. You can check that with E-Trade or with other brokers. That's it. So for me, I am not affiliated with any broker. I don't work with them, and I have no relation with them, and I don't teach for them, and I don't sell information for them. No. Thank you very much for asking. Now, Tesla said, what means when a company beats and gap down? Now, sometimes a company has good earnings, but the traders think that the company is not doing good for the whole quarter. The stock was been going down, for example, or so. So they short it. So that's why I told you before. And now you begin to understand that you will never know what will happen. Good news, bad news, you will never know, because it is not a sure thing. I have seen before Facebook has good earnings, but it has a gap down. Okay? So it is the traders who decide for up or down. It is something that you will never know. That's why I told you, don't try to find a way that it is a sure thing. That's why, as you tell me right now, it's the thing that you tell me right now, that sometimes good news and you find gap down, sometimes it's bad news and you find gap up. You don't understand. It's just because it is the traders, it's Wall Street guys who decide what to do. Because they have money, they can do whatever they want, and they do it only for few hours, and that's it. And they exit with their profits, and they are gone. They are not investors, or they short sell for a long time. No, they just do a quick trade for a few hours. They short sell or they gap up, and that's it. Now let's continue. Klaus with Twitter account say, Vincent, I made some money shorting OSTK. Not bad. It's very good, but be careful. Cloud with Twitter account, be careful. If you are doing swing trading, it means you are holding for the night. You will never know. Maybe you are still shorting for many days, and then we have a gap up. You will never know. Understand that having a gap up, it will be a big problem. That's why for me, I don't do it. Wiseman said, the few people that make money with options have been buying stocks for many years. Yes. Yes, there are some who are doing like selling calls or selling puts, and they can make money if the stock doesn't move that much. Because sometimes if you sell a call or you sell a put and you get the money, but if the stock is doing better than your premium, it means you are just losing money because you didn't get the money, all the money. There are some who are doing that when they have larger accounts because they don't care. They just try to make money on the spot by selling calls or puts. You can do that if you have 100 shares of any stock. You can do that if it is you just tell your broker, he will show you how to do it. To sell call, to sell a put, which strike, and what time frame, like 2 weeks or 1 month or 6 months or 1 year. He will show you how to do it, and you can do it. But understand that always there is a risk. There is nothing in the market that you do without risk. Understand that. If someone tells you there is no risk, he is a liar. And if you have an example, there is no risk, you should tell me. Except when there is a interest rate on CD or something like that. No one is doing that. And Clown with Twitter account said, Kareem, I was shorting OSTK and I am not going call for only 50 shares. Yes, try for me. I'm just telling you my suggestion, and you do whatever you want. If you are doing maybe day trading when there is bad days, for as you have seen the stock, it has been going down daily. This is your opportunity to do day trading. But if you are swing trading, it means you hold the stock for tonight. What if there is a gap up? You will never know. If you have a gap up and it is too much, you will lose a lot of money. Either you do 50 shares or 100 shares or 1,000 shares, it means you will lose a lot of money compared to doing day trading. Because in day trading, if something is not normal and you begin to lose, you can sell. And you exit the trade and you have no trouble. But when you hold for the night, you will never know how much loss you will make. You will never know. Because it is illimited. Unlimited loss. You will never know. That's when I'm trying to explain to you selling short. because I have a training about risks in selling short, and I will show you all the kind of risks that will happen, just to understand and to be aware of that. OSTK is very risky, long and short. It could gap up again because the margin calls. No, I'm not speaking about margin calls. You don't understand me. When you sell short, first, you can't sell short without a margin account. Even if you are using only your money. Let's say you are using only your money, but you should have what we call a margin account in order to sell short. There is no sell short without margin account. So you understand? And I think you understand this because you told me you sell short. Clown with Twitter account said it is violation of Security Exchange Commission if the CEO tweet something about acquisition that's not true. No, listen to me. CEOs of companies, they file for news about the company. They don't just tweet like this. Okay? They file. It means they send information to the exchange and you can read it. That, for example, there is an acquisition and when it will be, because all these things should be announced by the company before things happen. For example, there is a split. They don't just do the split, the company. They will tell the investors that there is a split, either up or down or 2 or by 1 or 1 by 2 or whatever. They should announce this, and this you will find it in the filing of the company in each website. So the CEOs, they don't just speak like that. Okay? But understand that people talk. Okay? They talk. You can just go and this Security Exchange Commission, just go to any CEO and you say you lie. Okay, it's not like, it doesn't happen like this. But the companies always announce information about future things happening to the market. For example, if they want to change the directors, executives, the CEO, if there is a major acquisition, if they are selling a lot, if executives are selling shares, if they are buying shares. Now, when they do the action, they post it. So you can find it. Okay? You find this information after it is done. Some information after it is done. For example, you say a CEO has sold 1 million shares from his own portfolio. Okay. But he will not tell you before. But when the action is done, he will announce it as a filing. Because this information, the investors should know the insiders trading. Okay? Now, another question with a clown with Twitter account. Facebook is down again. Facebook exists for another 14 years and that's it. Now, when we say, see, clown with Twitter account, Facebook was, the first day was, it goes to $45 and it goes to $38 in the first day. I have traded Facebook the first day. Then it was going down until $15, until $17.55. All the people said that Facebook is a failure. I was the only one who said Facebook will be as strong as Google. And I told them it will reach $100. They don't believe me. Now, when it reached $19.99, I bought it. But I do only swing trades. It means when it goes to 32, I sell it at 31. So I always trade when there is an opportunity for Facebook from 2012 until now. So predicting about things, Facebook is good, is bad, it doesn't matter, because you think about the news, about the earnings. Now Facebook has made money, but it is not enough. As the analysts say, it doesn't mean that it loses money. So understand that Facebook is always making money. That's why it goes from 1755 now to now. It's too much in 6 years. It's too much money. Okay? So predicting things, it doesn't help. It doesn't help at all. Let me see. Where is excuse me. I am just trying to follow the questions. So Clown with Twitter account said, I hate Facebook. I will short when it pumps again. Clown with Twitter account. If I tell you that I have made a lot of money from Facebook since 2012, I am always in most of the gap apps in the trends. I was there, and I publish a lot of trades about Facebook. So if you see that there is bad news in this quarter, it doesn't mean that next quarter we have bad news, the other quarter we have bad news. Okay? If there is a downtrend, you will see it in the future. But right now, it's not yet. It's not because you lost money in one trade and then you get pessimistic about a stock. Facebook is like Apple, is like Google, is like the other. They go up, they go down, depending on the news. The news is just a short thing. But what you should do is follow the trend. If there is a downtrend and you want to short or you want to use puts or whatever, it's okay. But understand that these stocks are strong. They can go down, they can go up. Okay? And you have seen. Facebook was 217. I have been trading Facebook since 2012. So, and most of my trades are very good, and I make a lot of money from it. So if you have a problem with the earnings and you lose money, this has happened. It can happen because it's the news. Tesla said Facebook is having hard time going up. Maybe it's going for a long time. The growth is saturated again. No, it's not a growth saturated. So you try to understand. I'm just trying to explain. Now, Tesla and Clown with Twitter account. I ask you the question. What if Facebook has a gap app? What do you say? You will say nothing. You will say, oh, Facebook is the most, is the best stock in the stock market, and you begin to and if you make money, you will be so happy. So try to forget about the news, because the news is something that comes because short sellers have done it. It doesn't mean they will continue shorting the thing. Now, what if they short and there is a mutual fund or mini mutual fund and they find it an opportunity to buy because the stock is cheaper right now? It was 217. Now it is 173. So for some people, it's an opportunity to buy. Maybe the stock will, after 2 months, 3 months, 6 months, is going up and it reached 217 again. What will you tell? Are you telling me that Facebook is doing more earnings? No, it has nothing to do with earnings. It has to do with analysts. They say something It's the reaction of the traders always. And for me, earnings, I don't see it. I see the trend. And this is what I teach. Because if you see the earnings, you will never know if there's gap up or gap down. This is for sure. So if you do earnings, you are just gambling with your money. Sometimes gap up, sometimes gap down. So this is just gambling with your money because you will never know. And we have Chris de Guzman. Thank you very much for coming. Why you come so late? It's 2 a.m. 35 minutes. You come late, Chris. Last time you come early. And let's see with Tesla, you laugh. Jim Chanos is short seller. Jim Chanos and CNBC are liars. No, it doesn't mean, see. It doesn't mean they are liars or they are like, these people, most of the time they are paid. Analysts, they are just telling their opinion about the market. So this is for entertainment, and this is your problem. Tesla, your problem is that you confuse business with entertainment. Okay? These people, they tell what they want to tell. Okay? And he can't tell, oh, go and short that stock or short the company. It means he is against the company, and it's just entertainment. And these people are just paid. Okay? And Tesla said Turkish lira. Now, I'm telling you about Turkish lira if you don't know, because you are speaking about Turkey. Turkish lira has been going down for many years. It's not just from now. Go and check the chart, you will understand. So this is just about the economy and what's going on into the business between Europe, USA, Turkey, China, and Russia. It's the changes in the world economics. But it's not just from yesterday or last week. It was for many years. You go and check for 10 years, the lira, you find it's going down. That's it. Chipper said, Tesla 3, just because you don't agree doesn't make him a liar. If anyone stretches the truth, it is Musk. Okay. Tesla said, Chipper, Jim Chanos is Jewish. Do you still trust the Jews? Chipper said, Tesla is a nice car, but a terrible company that has yet to make profit. Yes, but it was a successful company. How the stock goes to 200 or 300 if the company is not successful? Tesla 3 said, all the problems that we have in the world and tensions are created by them. Worst people. Okay, see. Tesla, we try not to go to politics because here I am not doing a politics session. It's all about stocks. We don't talk about people are bad or good. It's not our problem here. Okay, so thank you very much, Tesla. Sayyid Zubair Sharif Patel, Salaam alaikum wa alaikum salam. How are you? Now, clown with Twitter account said, E-Trade are scams. I was shorting only 50 shares of us, and they buy to cover me without notice. No. Clown with Twitter account. Okay. Try to see if you are using their money. They have no right to shut down your trade. So clown with Twitter account, try to give me information by email, and we will discuss about this, because this is something that you can ask. I just give you an information. When you call a broker, you talk with a representative ask for a manager. If you don't agree, ask a manager to explain to you the situation. And please send me an email. At least I know what did happen and what the manager tells you what did happen, and I will tell you if it is correct or false. Okay? Thank you very much, Clown with Twitter account. And let's say Trump, are the Jews bad or good people? Okay. Trump, we try not to speak about races, about people, about races of a human being. We are not here to do that. So I will not tolerate this kind of discussion. So we will stop speaking about that subject anymore. Okay? So does Bezos short small retail companies? I don't know who is Bezos, so I don't watch TV. Wiseman Kareem, thanks as always. I have to go. Good night, night, everybody. Thank you very much, Wiseman. Thank you, Trump. Thank you, all of you guys who have been explaining. Hello, Robert Tijon. You come late because right now we are at the end of the session. It's 2 hours 41 minutes. We begin at 11 p.m. Eastern time. So Robert, next time try to come earlier because you know the time. We begin at 11 p.m. Cheaper Bezos is CEO of Amazon. No, I see. I don't think what the people are doing, and most of the time they will not show you people who sell short, or they will not show you. It's something confidential. I don't know. So I have no idea about the CEO of Amazon. It means they short the other stocks in order to be good. No, I don't think so, because Amazon, it's because the growth and the earnings are so good that the people and mutual fund, they love it. They like the same as they love Google, they love Amazon. It's just because they find always each year by year they find good results. That's why they stay. Robert Chijon said, I sent you an email about the stop loss of Facebook. Check it. Yes. Thank you very much, Robert. I will try to see your email when I finish the session, and then I can give you an answer if I can. Thank you very much. Clown with Twitter account said, can you trade combination of short float and earnings? Now this question, someone else in this chat, he asked me the same question. I don't trade earnings. If I am in the trade for a long time, I will wait and hold the stock, gap up or gap down. It doesn't matter for me. So I will not see short sellers. Now why? Because the news, sometimes it is up, sometimes it is down. So it has nothing to do with short sellers. The short sellers, they come if there is bad news. There are new short sellers. They are not the short sellers for stay for the long run. So try not to look for a sure thing. It doesn't exist. I'm telling you, I have explained this at the beginning of the session because someone else has asked the same question. I think it's the same question. Lighthouse Show said, I was listening, I did not write, but great shows as always. You are so right about Facebook. Thank you very much, Lighthouse Show, and thank you very much for watching and coming by and just hanging out with us, sharing information. Clown with Twitter account, you say after earnings. No, it's the same question. No. Are you going to say that any gap down, the stock will be going down. It can be going down or going up. So no one knows. So if you follow my strategies, if you trade, you will know for sure if you are correct or false. Because I teach that. I teach whatever is the stock in, I will teach you how to manage it. So the stock can be in different phases. So I will tell you each phase where you buy, and there is probability if it's good or bad. Hello, Mohammed bin Naba. Yes, I know your YouTube ID, and we have spoken a lot. I know that you are from Algeria. Thank you very much for coming, and thank you. So, as I told you before, a lot of people, they want to have some information in order to speculate. You can do that, but for me, I don't really speculate. For me, I use my training, I use my criteria, and I buy accordingly. If the trade goes good, I will stay. If the trade doesn't go good, I will exit with a stop loss. This is what I do always. This is the probabilities I'm following. I don't do like other people, just to short sell a stock and to leave it for 1 month or 6 months and then see the result. What if it is against me? Should I stay? No. Okay. Chiji CDN, hello. Just bought one of your lessons. Thank you very much, Chiji CDN. Whenever you order my training, you can just study it. If you find, if you need any help, questions about the training, you just ask me directly in my email. And I always put my email and my website. So this is my website, and this is my email for you guys before we finish this session. Okay? Before we finish this session, for you guys who wants to send me an email, here is my email. Trump say, do you go back to Algeria? For me, yes, I go visit. So, yes. Thank you very much, Chiji CDN. I am only thinking of penny stocks. Now, Chiji CDN, you should see how to search for stocks, how to put stop loss, how to follow the stock. This is what I'm teaching. So try, when you begin with that, try to see the other training. If you are confused, send me an email and I will help you. Okay? Cheaper, shalom and good night. Shalom. There is no Jew here. I don't know if there is a Jew. So there is no. Chiji, thanks, sir. Well, I don't have money. Yes, I will try and buy 1 to 10. Okay. Chiji CDN, you can go to do golden subscription. It means you subscribe and you have 13 training at the same time. Or you do silver subscription and you get 5 how to search for stocks. Penny stocks or big stocks, whatever. This is called silver subscription. It's only $25 a month. It's not that big deal. If you want the whole training, you can do the golden subscription. Okay? So training level 1 is for free. You can just go to my website and get it for free. Okay? So thank you very much all you guys. We have had a very good session. We have a lot of questions answered, and this is very good for you guys. Thank you very much, Shiji CDN. And ask me any question. If you have questions, just ask, or you are confused about something, just ask me questions. So we are at the end of this session. I know it was too long. It was 2 hours 49 minutes. It's too long. And I have been speaking all the time. Yes, Chiji CDN. It's always Saturdays at 11 Eastern Time. Eastern Time. You should see New York time. Eastern Time. I always do on Saturdays. You can send me an email if you are confused on Friday or Saturday in the day. Send me an email. I will tell you if there is, because all my subscribers on YouTube, they get notification. I don't know. Okay. So you guys, thank you very much for New York, because you are in Britain. Now you are in Britain. Now it's, I think it's day for you, so it should be maybe earlier. It could be like it could be maybe like 4 a.m. Okay, it's like 4 a.m. So it's you can watch this session tomorrow on Sunday at night. You can watch it. You can find all the questions answered, all the charts I show, everything. No, I know. Right now it is 6:53. I know it's 5 hours interval, but we begin at 4 a.m. for you. Okay, we begin at 4 a.m. for you. Tommy and Soren, sorry, man. Hi, you come late. Why you come late today? We are at the end of the session. We have been speaking for 2 hours and 51 minutes. So thank you very much, Tommy and Soren. Last week, you come on time, but this Saturday you did not come on time, and sorry for that, because we are at the end of the session. Please, if you have one question or two, I can just wait for one question or two, and then I can end this session. Oh, you were just got off the boat from the ocean. Where are you, man? Which ocean are you? Are you fishing? And which place are you? Which ocean and which country? Because I don't know where you are. So it's very good, guys, to see you and to always speak with you and have a good conversation. So if you have one question or two, I can answer that. And if why Chinese stocks is volatile after market, I have no idea. Sometimes I don't know if it is because of the news. I have no idea what is going on, because the news, when it comes, things will change. Okay. Thank you very much. So if you are looking, for example, after market, try to see if there is earning news or there is a news for the company. You can just check news. Huya is heavily charted. Let me check this Huya. Who? When is that? I didn't see any heavily. Is it today? No, there is no shorting. I find after the market, there is no, the stock doesn't move at all. It's the same. It's 25.61 cents. It didn't. No, it didn't. There is no what you said. Okay. Ah, you are in California. That's very good. When I heard California, I think about the gold rush in 1848. The gold. Yes, yes. You say Weibo and WB. Let's see WB. Where do you see this? Where do you see this gap down? There is no gap down. And Trump, you said there is a gap down. Where is it? For WB? Which day there is a gap down? I don't see any. So if everything is going with what we call a news, it's okay. Okay, so if there are news, if there are news after, it could be gap down or gap up. I don't know. So at this moment, the day traders have good time with the volatile market. Yes, it could be. Huya has 65% short interest. Karim, you can see short interest on VinVs. No, listen. I don't follow this criteria. Okay? It's not my criteria. Short selling, short interest, capitalization, volume, I don't use all what you know. Cheaper, I don't use all those. Interest rate, maybe you can see in options, maybe, but I'm not going to see anything. So for me, I don't use interest rate or short interest in my trading. That's why when you ask me, I don't use it. So I don't know. I have never used it, and I don't use things that doesn't help me trade. For me, I trade the price. If the price is going down, I see it. If it's going up, I see it. That's what I need. I don't need other things than the price. That's why my training or my thing is very, very simple, very direct, very easy to grasp, but it needs practice to acquire it. It's not easy. You should practice. Okay? So I don't use all that stuff, short interest and InfinVs, or because I don't use it as a criteria. So why should I use it? Now, if you use it, okay, and it makes good for you in many stocks, and you make strategy, it is good for you. You can use it. So for me, it doesn't mean something I don't use, it's not useful. It can be useful, but for me, I don't use it. That's the good thing about me. I don't use what other people choose. Okay, thank you very much. We are reaching now 3 hours. So we will be having another session next week as usual. So please, if you have more questions, here is my email. If you forgot to ask a question and you need me, you just send me an email. And if you are looking for my website, is always there. You just send me. You just watch training level 1 if you have never seen my training. And thank you very much for watching. Chiji CDN says, thank you. Even though I came late, I still enjoy the section. I am on way to work. Okay. Good luck with your work. And thank you very much for all your sharing, all your questions. And we will see each other, if God wills, next Saturday. Thank you very much, and see you